Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning, everyone. It is Monday, the start of a new week, and as is the norm, we will start off with equities, where US stocks recovered on Friday after dropping into an official correction as the risk of a government shutdown faded. The S&P 500 rose 2.1%, its best such day since November, while the Nasdaq 100 and the Dow rose 2.5% and 1.7% respectively. Meanwhile, incoming data showed that consumer spending fell to a two-year low while inflation expectations jumped, as tariff-related uncertainty made the economic outlook increasingly unclear. Even with Friday's jump though, the S&P finished down for the fourth week, the longest such streak of declines in 7 months. In markets, the VIX finished below 22, the dollar fell a little while the 10-year treasury yield rose, Bitcoin rallied nearly 5%, gold went past $3,000 an ounce for the first time ever, and oil continued its sideways churn above $65 a barrel. At home, the rupee rose for the third day and finished at 87. Data showed that the nation's foreign exchange reserves increased over $15 billion to $654 billion last week due to the RBI's FX swap. That was the biggest such jump since August 2021. Talking stocks, in the Nifty slipped, falling for the third day in 4. The benchmark finished 73 points down at 22,397, with the India VIX falling for the second day. The NSE 500, small cap and mid cap indexes all fell more than the Nifty. 10 of the 12 main NSE sectors dropped, with Realty falling 1.8% and PSU banks gaining 0.4%. On the NSE 500, 2 stocks fell for every stock that rose. The best and worst performers on the Nifty were Bharat Electronics, which gained 1.2%, and Shriram Finance, which fell 2.7%. Immediate resistance has moved lower into the 22,544 to 22,590 zone, followed by an extension at 22,677, while support is anchored between 22,245 and 22,330. The market needs to move out of the range defined by 22,230 on the downside and 22,677 on the upside to make its next trending move. Speaking flows, provisional data showed that foreigners withdrew nearly 800 crores on Thursday, bringing the month-to-date outflow at just over 21,000 crores. On to derivatives now. The Nifty's put-call ratio went from 0.96 to 0.86, while that of the Bank Nifty went from 0.98 to 0.94. Nifty calls added were far greater than the addition seen in puts, and implied volatility fell nearly 30 basis points, which meant that on a net basis, market participants turned slightly cautious. Looking at options concentration for the weekly contract that is set to expire on 20th March, the trackable range lies between 22,000 and 23,000, with notable additions seen at the 22,000 put strike and the 22,700 call strike. Near at the money call volatility fell more than similar distance put volatility, which meant that options traders were positioned cautiously. But how Asia does at the open this morning, given the surge on Wall Street, might see these expectations change. Speaking net index options activity, foreigners and retail investors were bullish, while proprietary traders were bearish. Elsewhere, foreigners' net shorts and index futures were flat around 184,000 contracts. Looking forward, the GIFT Nifty was up 20 points. Asian markets were trading firmly in the green, with Japan, Hong Kong and China stocks jumping. US index futures were down about 0.4%. Coming to stocks, Aadhar Housing Finance was at horizontal support, while Aurobindo Pharma, Cochin Shipyard and Dabur were at horizontal resistance. Elsewhere, Chambal Fertilizer, Fortis and Soba Developers were at trendline support, while GMR Airport, Endurance Tech and Hindustan Zinc were at trendline resistance. Talking breadth, 16%, 9% and 12% of stocks in the NSE 500 were above their 50, 100 and 200-day averages. Wholesale prices data and the trade balance number are due from India today, while retail sales and Empire manufacturing data will be released from the US. That wraps up the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you tomorrow at the same hour. Good day and take care.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.